Should I buy Facebook? Hey, welcome to Dallas Stock Talk, where I talk about topics relating to investing in finance, but more specifically the stock market. In this video, I'll be doing a stock analysis on Facebook. I'll be going over the company overview, the key highlights, the streams of income, the risk factors, competitive advantage, financials. I'll be giving you my personal insight of whether I think you should buy Facebook. But before we get started, make sure you smash the like button because it helps the YouTube algorithm. It helps YouTube know that this is quality content and help my videos reach a broader audience. And also, if you're a big fan of finance and investing t-shirts, make sure you check out my store, Wall Street Stock Apparel, where I make custom finance and investing t-shirts. So let's just jump straight into it. Facebook is a social media platform, which is their mission statements: give people the power to build communities and bring people closer together. So this is pretty much a social media platform in which people can interact, communicate, and have an impact on society. Now, this is the social media setup. I'm pretty sure a lot of you guys are familiar with it, but just kind of going through the standard process of some of the things that I like to at least show some of the features about it. Facebook is the largest social media platform in the world, but let me just give you some statistics. Just for video purposes, 69% of Americans use Facebook. 42% of American teens use Facebook. Facebook has 2.41 billion monthly active users, increased 12% over the year. So I just kind of wanted to give a little information about some key statistics. As you can see, these are the most popular social media networks, as we have Facebook at the top. And it's also good to mention that just know Facebook owns Instagram and Facebook Messenger as well. So if you have the top four, we have Facebook, YouTube, WhatsApp, and Instagram. So you gotta remember, Facebook owns WhatsApp and Instagram, of course, Facebook Messenger. So all of those are under Facebook. So don't think Instagram is separate or WhatsApp. It's all under Facebook. And as you can see, look at the amount of users. And by the way, you can kind of consider this is in billions. So it would be 2,853 million, but for simplification purposes, we'll say 2.8 billion. Right under you have YouTube, and then you have WhatsApp, very underrated, 2 billion people on the platform. Then you have Instagram, 1.3 billion. Same thing for Facebook Messenger. So you have a lot of people on the platform, and this would be what you can kind of consider the network effect. The more people on the platform, the more popular get, the more acceptance, then more people will end up willing to pay. And we'll go into that a little bit later as far as Facebook generating revenue. Now, as you can see, let's check out the number of monthly active Facebook users. As you can see, these are in millions. So as of Q2, that's 2,895 millions. Don't worry, it's pretty much 2.8 billion. So you guys can just follow up, and we see that nice increase. The reason why this is important is because Facebook makes most of their money from ads, and I'll show you the breakdown of that a little bit later. So the more active users that they have, the more people they have on the platform, and then that makes more money that they can make from ads. Now, and this is also, you can just look at the global revenue. So when it says 28,580, you can just think about it for simple terms. If you wanted to put it in billion, it'd be 28.5 billion. And as you can see, a lot of Facebook revenue comes from advertisement. So as far as the streams of income, I guess this is a good transition. You can say that roughly about 98% of Facebook revenue comes from advertisements, meaning the businesses pay to put their ads on Facebook so people can end up buying. And we're going to dig deep in this as far as the analytics. But I do have a picture for the breakdown. This is from 2019, but the percentage-wise is pretty much the same. So you have 98.5 is in Facebook ads, and then you have 1.5 is for payments and other fees. But I just wanted to just kind of show you as far as the streams of income. Now let's go back into this graph, which is pretty much the same thing, except these are actual numbers in the latest quarter. So since we talked about streams of income, let's look at these key components that you really want to pay attention to, since Facebook makes all that money from ads. So you really want to see the daily active users increasing, monthly users increasing, and really people stand on the platform, and you want to see how much money that people are spending. You want to see that increase over time, because those are the key components that you're going to need in order for Facebook to keep generating and keep growing. So we see daily active users. This is from 2019 all the way up to 2021. So that is increasing nicely. As you can see, if you want to pay a little bit more attention, US and Canada seems to be about plateau. I mean, it's not increasing a lot, but for the rest of the world, it's increasing. So that's pretty good. Now, if we look at Facebook monthly active users, we also see an increase as well. Once again, these numbers are in millions, so 2,895 million, which would be equivalent to 2.8 billion. So I just like to say billion because it's much easier to grasp, but that's how they have it. Now, this is very important here. So we have the Facebook average revenue per user. So as we can see, worldwide, US, and Canada. So we can see most of Facebook makes a lot of money from US users. So if you were on the bearish side, you can say, okay, since the US and Canada, as far as monthly active users, aren't really growing, that can suggest in the future that Facebook is not going to have as much growth as before. But on the flip side, I'll actually go back so you can see United States and Canada. United States and Canada. So these are the numbers I'm looking at, and once again, these are in millions. So this is 244 million. This is 259 million. So as you can see, from, let's just say, 2020, it only increased by 4 million in 1 year. But as you can see, the other ones, they increased way more significantly. So I just wanted to let you know these are the things that I'm kind of looking at when I'm really analyzing these companies. Now, as you can see, Facebook on the bullish side, you can say, okay, they have a lot of room to grow. Europe, Asia, the rest of the world, where they can increase those costs. So even though the US is plateau, the other ones, they can increase their revenue per user there. Okay, also, because they also have the revenue broken down by country. So the US, you can see the US, most of that money comes from the US, which certainly matches the other data. As you can see, next is probably Europe, and then Asia, and then the rest of the world. So Facebook does a really good job of breaking down the geographic, so you can kind of really look at it and dissect it. Some of the stuff I'm actually just coming across, they did a really good job of breaking it down. So next, let's look at risk factors. So for risk factors, they have this site called Tip Ranks where they end up going over some of the risk factors. But for the risk factors, I would really look at the Form 10Q. But I'm just going to list out some of the risk factors that I came across. Of course, I would say any type of legal, anything particular to regulations and legal things. I will also say privacy rights or copyrights or anything like that. Also, because they have so many users, if the number of users end up going to a different platform, like a competitor, like TikTok or somewhere like that, or maybe the social media platform by choice is somewhere else. In the news recently, this is where they had a trouble in the 60 Minutes. It says pretty much Facebook has a conflict of interest versus they're picking profit over the good of the public. So all these types of things, risk factors that Facebook comes across, any type of data breach, any type of hack or anything like that. And maybe it just could simply, a risk factor would be that people spend less time on Facebook. Maybe it gets a little old or something like that. Those are the risk factors. Now for the competitors, any type of social media platform you can think about, as you might hear the rain, hopefully it doesn't mess up the video, but you got Google, TikTok, Pinterest, Snapchat, Twitter, any type of social media presence that pretty much make most of their money from ads would be competition for Facebook. And once again, this is the Form 10Q. If you want to see Facebook risk factors, you can just scroll down and they have, all you have to do is click risk factors, and they have about 20 to 30 pages of the risk factors. And by the way, these are the documents if you're an investor, you really want to be able to at least skim through it or be familiar with this document, because this really must tell you all you really need to know about the company. Now let's check out Simply Wall Street. So let's look at some key components for the analysis. Now, as you can see, it says Facebook allows people to connect with their family and friends. We already know that. So let's look at the competitors, similar to the ones I said, Snapchat, Alphabet. They also have Match Group and Pinterest, but those are, some of the competitors. Any platform that makes most of their money from ads online. And by the way, for all these social media, I actually did a video on them. I think I did one for Pinterest, Snapchat, Twitter. Just check out the suggested videos where I kind of looked at all these particular companies. Now, as you can see, as of October 4th, we've seen a decline. At one time it was at 382. It's all the way back down to 326. So if we've seen that, and that's relative to the recent news about the Facebook and things like that. Apple iOS. Now you got to ask permission. The person have to give you permission in order to get their data. Whistleblower on 60 Minutes. So we definitely seen news really impact that. But in my opinion, for a long-term investor, this is what I consider noise, and the current event is directly affecting the stock price. So this has nothing to do with the overall performance of the business, in my opinion. It has been increasing nicely. Of course, dips and stuff, but that's kind of normal. Now, as we look at the volatility is high. The average market volatility in the industry is higher, but Facebook is on the high side, so you can expect volatility. As you can see, Facebook for 1 year is 23.3 versus the industry, which is 60.2, and the market, which is 23.7. It's just something you want to definitely just keep in mind. Now, as you can see, the earnings and revenue breakdown. So for the revenue, 104 billion, cost of revenue, 19 billion, gross profit, 84 billion. Now, once you get the other expenses outside of the direct cost, that's minus 45 billion, and then the earnings is $39 billion. As you can see, the gross profit margin, which would be the difference of this, is 80%, and the net profit margin, net profit, is 37%. But anyway, from the evaluation perspective, now if you're looking for a value company, you're looking for a lot of companies that are underpriced relative to the market. The discounted cash flow is a method that a lot of individuals use to value stocks. You base a company's value off of the projected future cash flows, and then you discount what the value would be today. So this is after you factor into growth and all of those other assumptions. Now, as we can see here, we say according to Simply Wall Street, it has that the stock is 48.5% undervalued. Now, these numbers, I don't take them, I just pay attention to it. But once I see a huge under 48.5 undervalued, to me, that is a really good indication that even if this is slightly wrong, it could be a strong indication that Facebook may be a great buy. Now, you have to dig into it a little deeper, but at the current price, according to the cash flows of Wall Street and what I've did some of my research, this definitely seems like an undervalued stock if you factor into its potential growth. Well, if you don't think it's going to grow, maybe not so much. But when you're looking at the price to earnings ratio from evaluation perspective, the lower the PE ratio, the better. If we can see, Facebook price to PE ratio is 24.8 versus the media and service industry is 41.3. So Facebook, if we're looking at far as multiples, is very attractive compared to the industry. Also, if we're looking at the price to earnings growth, it's 1.6. Anything 1 or lower, it would be pretty good. And we're looking at the future growth. So let's look at the future growth. You can see it's projected to grow in earnings and revenue about 15%, let's just to say. Industries about 18% for the earnings, 16% for the annual revenue growth. So as we can see, as long as I would like to see it at 20 for its growth, but hey, 15 is steady. But I think these are relatively conservative numbers. Now, let's look at the revenue. As you can see, the revenue is in blue, earnings is in green, and let's look at the cash flow. So as you can see, when I say projected cash flow, these are the cash flows that they're projecting.
nice cash flow is supposed to be increasing as well as the earnings as well. So as you can see, that's pretty good there. At the future return on equity is pretty high, 22%. As you can see, the industry is only 10%. Now, if we want to look at past performance, as far as the earnings growth historically is 24.3. Now, let's go back up to the future growth. The analysts project that it will be growing at 15, but historically it's been at 24.3%. So it has a strong, as far as the performance over the past 5 years, very strong performance there. Let's check out the financial health. As we can see, financials amazing, spectacular, getting be better. Assets cover short-term and long-term liability. I already know Facebook, they're gonna be loaded with cash. But anyway, as we can see, debt, no debt, cash, oh my gosh, that's a lot of cash. Debt, equity, it's just flawless, no debt. I mean, it's just from a financial perspective, we're looking at the number, it can't even get better. I mean, I just want to just look at this all day. It's crazy. So let's see the breakdown. As we can see, institutions own 68%, the general public owns 16.6%, and insiders own 15.4%. So let's check out Yahoo Finance so we can. This is sometimes when I like to look at Yahoo, and also you can see Yahoo has their own little formula. POE ratio equals the growth rate. As you can see, Yahoo also labels Facebook as undervalued. Scroll down first to see Yahoo says it's a strong buy. The average price point is, well, $416 right now. Is $326 on this one. I kind of have to agree with them on that one a little bit as far as Yahoo's recommended in this buy. As we can see, the revenue grows from 2017 from 40 billion to 55 to 70 to 85. As we can see, let's look at the quarter as well. Actually, I wanted to check up this one. They've been beating expectations. So these are some of the things where you see they're beating expectations. So financially, everything seems sound. But my overall opinion, personally, I think Facebook is a buy. I don't really say this on my videos a lot, but I definitely think Facebook is a buy. I actually did start buying it at the 326 mark. I do realize that with things like this, just because we've seen a pullback, it can go down further, and I don't really try to time the market, but I will say that I am buying. So if we keep seeing, the more the stock price end up going down, the more I'll end up buying. Like, I normally like buying small positions because I don't know how far it's going to drop down. I don't really try to time the market, but I do buy small amounts. And if it ever got to this level, about the, I want to say 290 mark or something like that, definitely, but anything below this 309, it's really attractive, and I'll probably start increasing my position even more, especially if it can get to that low. But I'm not sure if it's going to get there. But if it gets lower than that 300, I really like it as a buy. But even now, I think it's a buy, and I actually purchased a small amount.
And that concludes this video. Let me know what you think about Facebook in the comments below. If you haven't already, make sure you hit the like button. If you're new, make sure you subscribe to the channel.